Now we are starting with the another new area, which is professional ethics. You might be wondering then why we are studying ethics. You are gonna be a professional accountant, and if we do something wrong, it's not you whose reputation will be deteriorated, but uh, your esteemed organization's reputation as well as ACCA or any professional body to which you belong, so reputation will deteriorate. So that's why mm, they teach us the ethics. Now, as far as the ethics is concerned, we have fundamental principles. We have five fundamental principles of ethics. Okay, and what are those? Firstly, we have integrity. Integrity means a person should be honest and straightforward in all professional relationships. Okay, then we have objectivity. There should be no bias or conflict of interest influencing your professional judgments. Okay, now you might be wondering that what is mean by uh, conflict of interest. For example, you are an auditor, right? And you went for the audit of Apple company, for example, right? And on your way, you get a call from your family that your uncle has expired and you got the 10,000 shares in inheritance from that uncle. Now, you see, you are the shareholder as well as the auditor, and being a shareholder, you never want EPS of Apple to be dropped. So you will now see this will influence your judgment to manipulate the figures, financial figures, so that EPS won't get dropped by any means. That is conflict of interest. That means the clash between personal and professional relationships. Okay. Now, next we have professional competence and due care. Now, what is professional competence and due care? Keep up your professional knowledge, and skill as to give a competent professional service using current developments. Uh, for example, you know, earlier it was IS 18 revenue recognition, and now it's IFRS 15 revenue recognition in customer contracts. Earlier it was IS 17 leases, now it is IFRS 16 leases. So, do you think that if you do not update yourself from IS 18 to IFRS 15, it will be beneficial for your client or your organization? No, it will. It's not. In the same way, if you want to update yourself from IS 17 to IFRS 16, will it be okay for you? No, it won't. So, being being a professional accountant, we are like smartphone batteries which need to be recharged all the time. So we have to recharge our time with our skills and knowledge so that we can give the up to date services to our clients or our esteemed organizations. That's professional competence and due care. Okay. Next we have confidentiality. Where a person should not disclose the client information to third parties, but it can be disclosed if it's a legal duty or in public interest. But yeah, remember, if it's in a public interest, you must take your legal opinion before disclosing it. Otherwise, you may in a jeopardy that how you can breach the confidentiality. Then we have professional behavior. Well, a professional accountant should avoid such acts which deteriorate uh, your and professional body reputation. That's professional behavior, right? For example, refrain from any conduct which might bring discredit to the profession. The professional accountant should act in a manner consistent with the good reputation of the profession. So far, so good. Now, as far as the confidentiality is concerned, what are the obligatory disclosure? Remember, you can face these scenarios into the exams as well. So when the auditors know or has reason to suspect that client has committed treason, terrorism, drug trafficking, money laundering, that's obligatory disclosures. Then what are the voluntary? on which you must seek the legal opinion first, protecting member interests, legal process, public interest. Okay. Now, let us discuss threats to the independence of auditor. So let us discuss the threats. An auditor must be independent and be seen to be independent. So we have various categories of threat. Firstly, we have self interest threat. Now, what are the self interest threat, by the way? Financial interest at client, um, recent employment at client, low balling. Now, what do you mean by low balling? Yeah, low balling means lower fee than market. No, lower charging lower fee than market. It's low balling. Overdue fee. The fee, the earlier fee is not cleared yet, and you are planning for the another audit. Contingent fee means fees which is depending on the other factors such as client saying you that save us money in the tax and we will give you some extra fee. That's contingent fee. Okay. Um Gifts and hospitality is another example. So I hope these examples are enough for the self interest threat. Then we have another threat which is self review threat. Now, here the auditor's reviews a judgment he or she has taken herself, or an audit firm prepared the financial statements and then acted as auditor. This is threat to objectivity and independence. Now, how it happens? For example, uh, you provided the tax services to the client or the internal audit service or whatever it is, right? And now you are going for the audit at the same client, right? So obviously, now being an auditor, you will do the audit of this tax figures as well, which you have completed yourself, and now you may oversee them. That dude, I have calculated this myself. How can we are wrong? So that's self review threat. Then we have advocacy threat. Well, what is advocacy threat? Promoting client at public event, defending client in a court case, negotiating on behalf of the client. That's all advocacy threat. Then what is intimidation threat? Intimidation threat. You know, here the auditor can't act independently as he or she is scared due to intimidatory threats. For example, this client said that do as we wishes or we will remove you or we won't give you due fees, right? And finally, we have familiarity threat. uh, auditor and client have a too close relationship. For example, due to long association over many years in carrying out the annual audit. So far, so good. Now let us discuss the safeguards. Safeguarding the independence is the responsibility of the audit firm and the profession. And so, at audit firm level, it can be done by training to an appropriate level for the role. They should have quality control procedures. This ensures that independence is considered in all work performed by the audit firm. It can be done by consultation. So issues can be discussed internally and procedures are laid out to facilitate this uh, by ethical conduct. It can be done and internal controls. Well, another control is the profession. Right. So as then we have our profession also take the disciplinary action as appropriate. The profession regularly suggests new practices and procedures designed to improve the audit independence, auditors' independence. So things that the profession do have safeguard against ethical threats are a regular rotation of auditors made compulsory, right? As per the code of ethics, auditors should be rotated. Audit partners should be rotated after every 5 years, and he should not return to same client before 2 years. Second is using audit committees. Well, ACCA exams and CPDs are itself is a safeguard. Corporate governance and auditing standards are also the safeguards. Then we have some safeguards at individuals level. What are those? Complying with the CPD regulations, keeping in contacts with the colleagues and fellow professionals to informally discuss issues and problems, obviously, and also have independent mentors which used to discuss individual threats. Well, when you will look at the examiner question, and so you will get a scenario in front of you. So in that scenario, if auditor is suspicious of ethical threat, action must be taken. So what are those steps? Well, assess the steps, consider ethical issues, look at fundamental principles. Are they affected? Establish procedures. They are dealing with otherwise. And finally, look for alternative, such as external regulator or worst case scenario resigning. Obviously, then you need to know about professional skepticism. So, what is professional skepticism? It means a auditor should not assume blind, honest, or dishonest, right? Uh, they should be alert for all situations. Otherwise, they should be honest for all types of situations. Okay. not a total distrust. It requires an inquiring mind that is open to the possibility that something may be wrong. It is supported by evidence. Is it consistent with what is known from elsewhere? Are assumptions reasonable? In today's world, impairment testing is commonplace and works on assumptions. For example, the auditors need to not only see a record of what the assumptions are, but also challenge them and understand how they affect the conclusions the client has come to. Too often, it seems that auditor is looking for reasons why assumptions can be supported without also considering facts that might suggest they are not appropriate, too optimistic. For example, is there sufficient evidence? If an auditing standards require a certain presumptions, for example, of a significant risk of fraud in the case of revenue recognition, does the auditor too easily find reasons for overriding the presumptions? Right. So that's it for this area, and I hope it's clear to you. See you in the next session.